Babali Teteo and right, anyway, let's get into the fucking market recap for the last couple of days. I haven't taken any trades. We had Actually, let's do a quick summary of the news. Yesterday, hold on a minute. What's going on here? Hold on a minute. Let me pop this full screen, will I? Right then. So, yesterday we had FOMC federal funds rate in the evening. So I wasn't going to trade because of this, and interest rates remained the same. So this caused a big sweep in the PM, well, just after the PM session, really, and then like a massive inverse fair value gap created after that move down, and a nice push up following that. And then today, my jumper's fucking caught on my. And then today, what do we have? Unemployment claims. We had unemployment claims. They were lower than the previous release, but they were higher than they were forecast. And, seeing the move today with all the context in the market and all this tension going on with all the commodities absolutely fucking shooting up. What is going on? We'll deal with that for now. Yeah, pretty much because the unemployment was higher than expected. Markets dumped again. So in terms of the model, we could have had two absolute banger trades. So pretty much, let's get into yesterday. Let's get into yesterday first, and that was Wednesday, 28th. Pretty much, on the Nasdaq, we've got the 8:15 candle marked out. Trades down, coming into 9:15. Lovely tap into the midpoint. We had London low got taken a little bit. That would have been break even point. Pardon me. Asia low as the next target. This 15-minute fair value gap, and ultimately this little gap here. In terms of bullish targets on the Nasdaq, you can see I marked out these two highs. So I was just pretty much weighing up the probabilities of which way price was going to move. And yeah, it just felt like it would be a bearish day. But like I say, we had FOMC in the evening. So I was, reluctant to take a trade, even though it would have absolutely slapped for 3.24 to 1 at full TP. Why can I not right click? There we go. Limit order. 2% on that would have been £108 stop loss for £350 profit. And that would have hit at 11:30. Very nice move down there. Like pretty much, we had a little bit of consolidation around that time. You can see price comes back up and taps the midpoint a couple of times. We created a inverse fair value gap. I think it was on the 3-minute. Yeah, so this inverse here. So even if you missed the entry here, you could have waited for price to break through the inverse fair value gap after all of this bollocks, and then enter off the tap back into it to target the same targets. And yeah, so that would have been that move. Where the fuck are we here? So this position was, I was basically just tape reading yesterday. So this position would have been, if we're bullish and bias like continues up, and we target these highs, this is what the trade would look like from the midpoint. As you can see, that's dragged out. That would be entry at the midpoint. 50 points on the Nasdaq for the stop, and how many points here? 158 to 998. So that's like what, 60? Am I being an idiot? No, 160 points pretty much. And then just 3-1 to go the other way if bias did prove that was to be the case. But yeah, So that is that move. And then following the PM session yesterday, you can see here, this is the FOMC candle. Let's drag this back. Take drawings off for now. Yeah, so in here you can see, all these people wanting price to come back up to go take the AM high. They would have all been stopped out, and then we get this high buying pressure here to then move us back up. And then going into today, I haven't really looked at the other sessions, but on the NASDAQ, the 8 a.m. break and retest model wouldn't have quite played out. Have I written it on the wrong thing? Where did I write it? There we go. Yeah, so in terms of targets, Asia low would have been the main one. And obviously the FOMC data low would have been another one. Those have been your two targets. I'll mark them out here. Bang. And you can obviously see that with the previous daily low. So yeah, no midpoint tap, as you can see here. Now what's interesting about this is price did initially break up, but due to the nature of this 5-minute candle just completely breaking and displacing through this 15-minute zone here, that would contribute to a bias bearish, and at 9:30 price trades back up, and then you can go short. Like I say, it didn't quite hit the midpoint, so this would not have been an entry on the NASDAQ. However, on the S&P, this would have been absolutely spot on. Got bearish unemployment data, and bit of a sell-off, is it? Yeah, pretty interesting to see. I was kind of watching this, just like, fucking hell, how much further is it gonna go? But yeah, nonetheless, with what is this line that I marked up here? Okay, so yeah, we took these two highs on the S&P. This was yesterday's candle, wicking above that, and then we've traded into this 4-hour fair value gap, which is quite an interesting point actually. So if we inverse this, then maybe we could be on for a potential previous daily low, previous daily high model. But until I see that, unless, to be fair, inverse break, then we'd be looking for a fair value gap entry like around here, but it's still one of them. But yeah, so these two lines coming all the way across are the two highs. We've obviously got this low here, this low here within this fair value gap, and Asia low would have been the target, and that would have slapped for a 6.7 to 1 today. So 2% on that could have been 820 quid within, I think, about like 14 or 19 minutes or something like that. Yeah, I was very busy at work today, and I was just on my lunch really. I didn't really look at the charts, and by the time I did look at the chart, the move had already played out. So I was like, right, okay, well, we'll just mark out the position, what it would have looked like under the model. But yeah, if we were to go for the low before that, it still could have made 470 here. So really did miss out on this quite a bit. And I said Thursday was going to be a trade-in day. So it's one of them. It's nice to see the model work, but this is obviously a massive sell-off. So just seeing the development from this will be interesting to watch as we go into next week and the new month. And yeah, if you targeted what would it be, the data low from FOMC on the S&P today, just over $1,000 of profit for £123 risk. That could have been a beautiful 8.8 to 1. And these trades, they don't come about often. They don't come about all the time. So it is just one of those, when they do come, you got to be prepared, because you can make a bit of bank off them. But realistically, if I was taking this setup, I'd be going for either this low or the Asia low. And yeah, it was pretty much lovely. Like like I mentioned on the Nasdaq, traded up a little bit, respected the high, rejected off it, got this breakdown through the zone, price trades below it, wick up into the midpoint, go short there, stop 5 points above it. 991 would have been the entry, 996 would have been the stop, and then yeah, bang, beautiful. That being said, I was trying to get on my broker statement just before this video so I could set up a spreadsheet and do my monthly review, because I'm not going to take any more trades for the rest of the month. I mean, it's the 29th, so yeah, we'll just come back next week, fresh month. But yeah, pretty much the results for the month are minus 115 or something. So you know, it could have been better, but I know where my mistakes were, and what I can improve. Yeah, so we're down 132 on a month, and you know, just that one trade alone could have just cleared like, I don't know, like a year's worth of losses. So opportunities are there with the model, and it's just nice to see that. I just need to stay with it, stay disciplined with the model, and yeah, just make sure that when I'm losing trades, that I'm limiting the amount that I am able to lose, and maximizing the amount I can profit. So all of that being said, we have red folder tomorrow, as mentioned in many videos. Red folder on Friday equals no trades for me in 2026. I haven't had a proper look at this article yet, and it looks like I can't. So anyway, yeah, I mean, we'll have a quick look at gold to see what that's doing. Saw like a massive rip yesterday, all the way up to all-time highs. I think within within a day we went from 5.178 to 5,420 per ounce of gold, all the way up to 5,610, and back down to 5.1. So yeah, I mean, it's one of those really. What can you do? We're just looking at this. Do have a few daily gaps that are marked out, you know, this sort of zone here. Maybe you see price bounce of this, continue higher, or like the way it's all going at the moment, it just seems like it's going to keep going up. So it could be a good time to buy some physical gold. Obviously not financial advice, but if you want to be hedging yourself against the market, well, it might be a shout at the moment. Obviously, it would have been a shout a year ago, or even 5 months ago. Silver sort of doing the same thing. You know, we come up to all-time highs around $122, $121 per ounce, and we dropped back down to 112. So yeah, very, very interesting on that front. Futures market, I haven't looked at the futures market today. Have a quick look at Bitcoin. Bitcoin is struggling at the moment, let's be honest. Stick on the weekly. Looks like we are now in this bearish cycle. Probably end up coming down around like this sort of range, clear some of this, you know, before we start seeing any sort of traces of movement back up. Unless price just wants to, you know, bounce back, take out these people here, and then just continue up. So it's one of those. Like I say, me done for the month. I'll put up a full monthly summary with the spreadsheet, just like I did for my yearly summary. I'm going to make a habit of doing that every month and at every quarter end. So by the end of the year, you know, we've got 12 tabs on the spreadsheet with all the monthly trades, plus 4 tabs for quarterly trades, and then again like a yearly summary tab at the very end with the net profit, loss, all of that, takeaways from each quarter, each month, so we can really get into the data and just have that all mapped out going into 2027. Obviously it's only January at the moment, but yeah, I think it's a way forward, so I can really get my head around this model, and then I have, you know, a few other setups that I have in the arsenal that I can use going forward. So yeah, with that being said, I'll catch you in a bit.